Hey guys, welcome back to my YouTube channel. I believe most of you have consumed my materials, like I said in the last video. I probably learned something that is useful for beneficial for your next trade, something that's useful for your next skill learning. So today I thought it'd be wise if I address some of the things that I recently received. So I've got a lot of emails, a lot of direct messages, people asking me, Ron, what account should I open? Ron, um, what what charting platform should I use? Ron, how can I see the chart properly? So there's a lot of questions about elementary fundamental charting, accounts, stuff like that. So today I thought we'd do a video to address all these issues. So one of the accounts I use most of the time is CFD. CFD stands for Contract for Difference, and CFD is an account that most of my students use to trade the Dow Jones, the Singapore market, US market. Why? Because CFD allows leverages. CFD allows leveraging, and the commission is pretty small, pretty low. And I think more importantly, CFD allows you to be disciplined when you trade because there's margins, it's based on margins. So certain times you need to cut loss, you must be disciplined to cut loss, or you will encounter margin call. So today I'll be interested to share with you guys how one of my students who opened a CFD account, I think it was May 2019, which is like some months back, and then from 1,400 Sing dollars, he managed to turn it to $3,000 in, I think, 7 tries. 7 tries could be 7 stocks. 7 tries, 7 stocks, he turned it to 3,000 Sing dollars. So his return was about 100% in that 8 attempts. Okay, so come here, cameraman. So I just want to show you some emails. So take a look at this. So can you see one of my students who sent me, Ron, I just want to share my utmost gratitude to you. I've started trading with $1,400 at end of June 2019, and it has grown to 2004. After making 6 attempts by implementing the methods you taught, I hit my first $1,000 profit in my CFD account. I didn't incur heavy loss for the previous 5 trades because I exited immediately upon your favor. So he made like 1.4K in this US stock called Netflix, shorting 20 shares. And look at this email. He funded his account with 1,400 Sing dollars, and his account grew to 2,004 Sing dollars in 6 attempts. And then, just when I thought he was not trading anymore, suddenly he wrote me an email on the update of his trading, and he made another $920, lost $360 the next 2 days. He sent me his record, and he made like $900. He lost $360 something, and he made like $3,000. And just like earlier on, he sent me another record. He sent me another email, and I thought it'd be wise if I show you this email live. Okay, so watch this. Come watch this. Hi. He sent me like 11 a.m. Can you see 11 a.m.? Hi, actually I stayed away from the comments after this talk. Anyway, attached here is my trade record with my current position. Also, I missed the opportunity in the AMD trade desk because I was holding some stocks. Lockheed expect the direction and threw them after a few days. You can see my trade history for the past 2 days. Bottom line is, I feel fortunate and happy to have learned the basics from your trading methods because I managed to figure them out. But because even though I did not make great profits out of the missed deals, but I'm happy that I'm able to choose the right stocks to trade, which means my decisions was correct. But I had to close the trade due to uncertainties. Can you see? Same thing. He made $100 in this bistro, $5 in AdBot, and he made $860 in this, what stock is that? Wow, what stock is that? I don't know. I think in Bistro. Yeah, Bistro Mayors. So can you see his account is increasing on a attempt by attempt basis? So how is it possible, guys? How is it possible? So many of you ask me, Ron, how can I turn a small account, $1,000, $500, and make it like $2,000, $3,000, $4,000, $5,000? So it's very possible to do it. So one of the things you need to do is you need to trade something that's very liquid, something that is like up and down. There's fluctuations, which is one of them. One of the instruments is Dow Jones, or you can trade forex, or you can trade US stocks. All these instruments are pretty liquid. It gives you the kind of fluctuations up and down. It's only with fluctuations up and down that you can turn small profits to huge profits. Why? Because one day the stock can go up 10%, 5%, 20%. That's where you can see profits after profits escalating. All right. So one of the advice or one of the things I shared with him during the course when he came to learn from me was I told him, MV, your account is a small account, $1,000. So if you really want to grow it to $2,000, $3,000, $4,000, what you need to do is you need to do some trading, not investment. Don't buy and hold a stock for too long. Do trading, in, buy, sell, short, cover your shorts, in and out a few times. Pick the right stock. Pick the right stock that has volatility. It's much better than you buy a stock and hold for a period of time. Okay, so today I want to share with you guys something. So to pick the right stocks in the US, you need to watch the top active stocks. You need to watch the most top active stocks. Why? Because when you watch the most top active stocks, it is telling you there is a lot of buyers and sellers moving in and out of the stock. Another thing you want to watch is you want to watch the top, not the top, the Dow 30 stocks. So if you want something that is lesser risk, you can watch stocks like Apple, Facebook, Alibaba. What else? Micron, maybe. All these are, maybe Micron is not the Dow top 30 stocks, but I'm not too sure. But I know Apple, Facebook, Alibaba, Google. All these stocks, that is the Dow top 30 stocks, it gives you the kind of lower risk. Why? Because it follows the Dow Jones movement a little bit here and there. It means to say that if the Dow is up, one of these stocks will move in tandem with the Dow a little bit. At a certain period of time, why did I say a little bit? Because at a certain period of time when earnings is going to be announced, if the Dow is coming down 200 points and if like for example Apple result is good, Apple would shoot up maybe 5, 6, 7, 8%. So you'll buck the trend of the Dow. So what I'm trying to tell you is this, guys. If you want less riskier stock, but at the same time has a lot of volatility, you should watch the Dow 30 stocks. But if you want something like the Singapore top 30 volume, where you can see different stocks as compared to Dow, like a $5 stock, $20 stock, $6 stock, you should watch the top active stocks. But for beginners like him, like most of you, you should be trading something like Apple, Facebook, Alibaba. Try to use CFD to do margin, small positions. That's where you can increase your chance of winning the market and your risk is very tight. So guys, watch this Apple, watch these few stocks, because this is how we should trade. Alright? So I hope this video addressed some of your questions that you have for me, and I hope you find it useful. So in my next video, I'll share more on how to use CFD to trade. So if you're interested, click the thumbs up and let me know if you what are some questions that you have for me, and I can do more videos to assist you. So thank you so much, and I'll see you guys soon. See ya.